Okay, welcome everyone. January 28th, 2022. I had to think about it for a second there.
There you go.
Still hasn't clicked over in my mind yet. 2021 to 2022. I better get there soon though. It's crazy, eh? Last Friday of January already.
You know, flew.
Flies by. Just
It
flies by.
It has flown by for sure.
Yeah. So I'm surprised. I'm still getting used to your new background. We didn't mention that on the big presentation. It wasn't really the time to do it. It looks nice.
No, thanks. Yeah.
Looks really
Yeah,
nice. I think we
looks
need to
sharp.
add more things to it though.
Mm,
Like it needs to be another picture, a couple knickknacks in the back, or maybe a books. Yeah, you notice I changed mine too. I added some books here.
some books. I see that.
Yeah.
Yeah. We haven't scaled down to my books below here, but maybe I can profile a couple of books next time.
Okay.
Yeah.
All right. Well, now I've given people a chance to kind of sign in here. Let's get her going.
Sounds good.
Now, it's kind of been a weird week, hasn't it? Weird from eventful. I shouldn't say weird. Eventful.
Yeah,
week.
exactly. Yeah.
So what do we see this last week here, Ben?
Yeah. Thank you for people for attending here on a Friday afternoon after a long presentation on Wednesday. We went through a lot, covered a lot of things, and interesting market again this week. We have one more trading day in January, and we have Nasdaq down about 12% this month so far. Worst January ever for the Nasdaq. So it's certainly been interesting start to the year. As I mentioned in a lot of my comments in the presentations, I think the data hasn't changed. Growth inflation looks like it peaked, and we had Bank of Canada, Federal Reserve meet this week. Neither of them raised rates. Both said they were going to. The market rallied pretty good this afternoon. Kashkari, one of the Federal Reserve members, came out and said maybe we should walk back our comments. I'm a bit surprised that they waited this long before they did that, but that's what we saw, kind of some talk around maybe we shouldn't tighten as fast as we talked about. Maybe. Seemed to give a bit of a lift to markets into the close here. And so you had bonds, stocks, most kind of assets close up into the end of the day. We also saw volatility come back down a bit. I see, looking here, Nasdaq volatility came down to just over 30 now. So still pretty high, but starting to come in a little bit. Oil volatility, excuse me, still in the high 50s. And high yield spreads are still pretty wide. So lots of uncertainty, lots going on. And I did a few things today, but nothing dramatic.
Okay. Did you want to talk about what you did, or?
Sure. I've still been from opportunity perspective. Earlier this week, I mentioned, I think it was on Wednesday prior to the Fed meeting, I'd sold consumer discretionary and bought bonds. Today, reduced S&P, so SPY, and added to GLD, which is gold. So gold is down, S&P into the close here. I sold, was up around 2.25%, and made that switch at that point because the fundamentals haven't changed, direction hasn't changed. So taking advantage of these recoveries and kind of selling the rallies as opposed to buying the dips at this present time. So a couple of adjustments. Continuing to look to reduce risk when the market gives you that opportunity.
Gotcha.
Yep.
Okay. Did you want to get in the slides, or?
Sure. Just again, just two today. Trying to keep it quite a bit simpler. Obviously, as Scott mentioned, I did a lot of slides already.
Yeah, every slide on the internet was used in his presentation. So if you want more slides, just go rewatch that. As always, everybody knows how to ask questions here. We do have a question from Ray. I got to remember that he emailed in the other day, so
okay,
we will go to that after.
Okay, sounds good.
Okay.
Yep. Yeah, so just two quick slides here. A brief comment that I made on volatility as well. So, you know, this is the as I've mentioned on a lot of charts, when you look at these charts, when you get massive divergences, you get an alligator, and eventually that alligator closes. But you know, when you get a big breakout like you have right here, you've had, as you can see in the charts here, you get volatility spiking. So these are NASVOL and Russell Vol spiking, and you get a pretty dramatic sell-off in the indices, both down about 20% from their November highs. So, you know, when you look at this and kind of the last 5 years that we've had, you've kind of bought all of these. You've kind of went and said, well, maybe we buy into this sell-off here. So it's certainly something that is worth paying attention to. Given the economic backdrop, though, you have some cause for pause. And at some point, these alligators will close where vol will come down hard and the markets will rally. But certainly worth considering thinking about the next slide I'll show here, which is Ray had sent this along, so I appreciate that. But Jeremy Grantham, who is a long-term investor, been through a lot of cycles, I think 40 plus years investing, wrote a long piece that's worth reading for sure if you're interested in kind of a longer term view on valuations and market bubbles and things like that. But you know, in the context of what I showed before, which is, yeah, we've had a pretty reasonable correction from early November in Russell, and the reason Russell is important because Russell is kind of most of the United States. It's kind of the heart blood, kind of small, medium companies in the United States and tech. So if you take those and then you look at maybe a longer term picture where we've had similar events happen, this is Jeremy's view on, you know, this is kind of the 20s to the 30s where we get a big acceleration. We get, this is Nikkei, and a lot of people compare North America to what's happening, you know, what happened in Japan already. So this is of note for another day to go into more discussion around, but kind of blow off top into the late 80s. We saw kind of the tech run 1.0, blow off top, followed by a kind of a longer term sideways market here. And then if you look at where we are into the start of this year, where we've seen a little bit of a bleep here to the downside, not material enough, but it's worth saying, okay, is something materially different than the last couple of years? And if the answer is yes, if the central banks tighten aggressively. So it's important to see, like, we got a big gap here potentially that we could fill to the downside. And so it's important to say, let's pay attention. Let's take our time on what's happening and just assess where things are, because the economy is slowing, inflation slowing, and the central banks are saying we're going to tighten no matter what. So just 2 slides, but obviously talked a lot more today.
That's great. Well, you managed to first time ever on this on the roundup, you threw in an alligator chart. So hey, it's when we thought you couldn't find any more. And that's great. Yeah, Ray, you mentioned Ray sent that one in. That's great when you guys send stuff in like that. I know Lyle sends stuff in sometimes too, and it's really good when you guys do that. We love it because we can either talk about it right away or on here or use it in one of our presentations later. Or it's really good. We love doing that. So
Absolutely.
Keep that up. You want to get to question, or do you want to roll on here and do the question at the end, or what do you want to do?
Yeah, so I think I'll let's go ahead with the question, and then we can just wrap on what we see next week.
Yeah, it was actually we had quite a bit of feedback on the Jeff Parks interview, and it was in relation to that and the private equity investment. So Ray was just like, you just said that he'd be interested in hearing what our intentions are with respect to the space. As far as we do have exposure right to that to Stack Capital.
Yes.
Maybe you can explain how that works exactly, like how we add it to portfolios.
Yeah, so Stack, briefly, for those who didn't watch it, Stack invests only exclusively in private companies. Historically, for individual investors to get into the private equity space, you usually need to invest in a hedge fund, kind of 5 million or more, or if you had enough capital, you can invest directly with them. And that's not typical in the investment portfolios. So, but if you look at the last, probably 10 to 15 years, private companies have gotten a lot better, and a lot more high quality. They have really nice growth and kind of risk reward profiles. And so as I look at public markets that have gotten kind of overextended, valuations are getting a little bit more aggressive. I've looked, how do we implement private equity into the portfolios? And so Stack came to market with a unique offering where it's a corporation. They raised a bunch of money within this corporation. So it's kind of long-term money, and they don't have to worry about redemptions every little while like they would in a fund. What Jeff Parks and his team are doing is they're surveying the private market, seeing where the good opportunities are, and then participating in their later stages of the private equity realm. And so where do I see it? I see it as an alternative diversifier within portfolios that can offer, reasonable risk rewards. And I think if we go back and look at Jeff's report, I think they said they're looking to compound at 15%, I believe, on a longer term number. And if he's in one of their first investments, Bolt, they repriced at 100% markup from last year when they invested in it. So that's a quick snapshot on it.
Yeah, that's great. I think Bolt had a big week, right? They had an acquisition or something like that this week, or big round of funding that came in. So
yeah.
And just to mention, for anybody else hasn't watched it too, another company they invested in, SpaceX, right? Which is
Yep.
Elon Musk company. So that's not easy to invest in either. So that's good.
Yeah.
Good, great stuff. Thanks for the question.
Mhm.
As usual, any more questions, just put it in the Q&A.
Mhm.
All right. So what are we looking at for this week there, Ben?
Yeah, so next week obviously so Monday is the last day of January. I think there'll be quite a bit of action on Monday, just seeing as people are trying to kind of flatten out their books for the end of January. So it'd be more on the institutional side. So probably a fair amount of volatility on January 1st or January 31st. And then we'll see, because this kind of move that we're in, volatility is extremely elevated. Looks like the information right now is kind of selling the rally, so selling these kind of moves. And so I'll continue to look for that, because we haven't reached I guess enough downside in the equity markets that the bonds are really going up yet. And so we've seen kind of bonds hovering and showing some positive signs. But if we get a breakdown in stocks, those bonds should start moving higher. If equities take a bit of a pause here, maybe an opportunity to further adjust portfolios, but one day at a time right now.
Okay, great. Anything in the news grabbing your attention?
Not really. Not anything more than central banks are really driving kind of the direct news feed here, and we with them not raising rates again, I can't understand why they wouldn't have done that this week, given the fact that markets already priced it in. And so we'll see. Nothing other than that caught my eye. Obviously, crypto had another volatile week. Ethereum closed up about 10% here today, and Bitcoin about 7%. So interesting to see lots of technical support levels as we put into the presentation. So continue to watch that very closely and see if maybe we've put in at least a near-term bottom on that.
Okay, great. All right, quick one today, I guess. Any questions? Kind of last call for those. I don't see any right now. All right, that's it. You got anything else?
That's it.
Quick one today. Ben spent all his energy on the annual this week. I don't blame him. That was a lot of material. So great job on that. If you haven't watched that yet, you should definitely go back and watch it. We are going to send out a brief synopsis where Ben did like a shorter video. I think it was 1 or 2 minutes, kind of just a brief one for people that may not want to go through and get all the information, because I think it's an hour and 10 minutes for anybody who hasn't watched it yet. A lot of great stuff in there, not only things that you're looking at, but also things that we're doing internally with the group as well. So yeah, awesome stuff coming up. Okay, everybody, that's it for this week, and we'll see you next Friday.
Sounds good. Take care.